Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In today's video, I'm going to talk about why I believe the market has not reached its peak yet. I will explain why I believe the S&P 500 will go up even more this year. Before I start, I always like to give you more context first. At the time of making this video, you can see that the S&P 500 ETF here is already near an all-time high. The tech-focused Nasdaq 100 ETF is also near another all-time high. But interestingly, the fear and greed index is not even at the extremely greedy level yet. This usually indicates that the market is nowhere near the peak yet. In this video, I will talk about the other factors that will drive the market higher going forward. Also, I will talk about why it's very important to stay away from meme stocks such as GameStop stock. At the time of making this video, many retail investors have started speculating on GameStop stock, AMC stock, and other meme stocks again. This is because they want to get rich very quickly, or they simply want to support Keith Gill, also known as Warren Kitty, who started the meme stock bubble back in 2021. This is a David versus Goliath story. Warren Kitty is David, and the large institutional short sellers who are shorting GameStop are the Goliath. Now, near the end of the video, I will explain how you can become a multi-millionaire through long-term investing. I will explain why you don't need to speculate on stocks or speculate on meme stocks or speculate on cryptos to become a millionaire. I believe anyone can become a multi-millionaire through long-term investing. I will share with you my growth investing strategy going forward. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Each video usually takes me 20 to 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing in for the long term, follow my personal stock portfolios, watch my investing tutorial videos, and download the latest intrinsic valuation models for all the stocks I'm analyzing. So you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. First, I would like to explain why I believe the market or the S&P 500 will rally more this year. There are several reasons. The first reason is obvious. As of now, the US PCE inflation is already dropping gradually to the 2% target. The market already anticipates that the US Fed will start cutting rates sometime this year, perhaps starting in September. Right now, the US monetary policies are still very restrictive. Once the Fed is confident enough that the US inflation is coming down toward the 2% target, it will start decreasing rates gradually. Of course, this will make the entire market, the S&P 500 and Nasdaq 100 rally even more. Recently, both the Bank of Canada and the European Central Bank have already started cutting rates. In my opinion, it will just be a matter of time before the Fed starts cutting rates. Many investors who invest in money market funds have been sitting on the sideline. Many of them have missed out on the current bull market since late 2022. Once the Fed starts cutting rates, the money market investors will be forced to move their assets from money market funds to invest in more risky assets such as equities and bonds. I believe this will push the S&P 500 and Nasdaq 100 even more going forward. The second reason is this. Typically, when the market is near the peak, such as in late 2021, you will see a huge spike in margin debt. This means many investors are leveraging a lot and using their margin accounts to invest in stocks, cryptos, and other risky assets. As of now, I still don't see a huge spike in margin debt yet. This is why I don't think the market is near the peak yet. The third reason is this. Typically, when the market is near the peak or when most stocks are overvalued, you will see that the entire market is extremely greedy. At the time of making this video, you can see that the market is somewhere in the middle. It's neutral. It's not extremely greedy yet. I would be very concerned if the market becomes extremely greedy. This often suggests that most stocks are overvalued. And the fourth reason is this. According to FactSet research, the S&P 500's EPS is expected to grow even more throughout 2024 and the first 2 quarters of 2025. Of course, when the S&P 500 companies continue to have higher revenues and higher EPS, the entire market will continue to reach new highs over time. Higher revenues and higher earnings always lead to higher stock values over time. So if we consider all these things, I believe that the S&P 500 and Nasdaq 100 will continue to rally and reach new highs this year. Now, I want to talk about why I believe it's important to stay away from meme stocks going forward. The obvious reason is this: meme stocks are extremely risky. They are extremely speculative. Meme stocks such as GameStop stock and AMC stock in general do not always reflect their business fundamentals. Of course, if you're very good at timing the market and if you can predict the market, you can make a lot of money quickly by speculating on meme stocks using options. But if you time the market wrong or if you predict the market wrong, you can lose a lot of money very quickly. Recently, many retail investors have started betting on GameStop stock and GameStop call options again because they want to get rich very quickly through call options, or they simply want to support Keith Gill or Warren Kitty, who owns millions of GameStop stocks and call options. This is my opinion. I think it's much better to stay away from these meme stocks because they are extremely speculative and risky. It's nearly impossible to predict the market. For example, a few days ago, before I started making this video, GameStop surprised everyone by releasing its earnings much earlier than expected. The company announced that it would raise more money by issuing more shares. As a result, GameStop stock dropped as much as 40% right after these announcements. Of course, many retail investors have lost a lot of money from speculating on GameStop stocks and options. Other than meme stocks, here's another thing we should avoid. Many YouTubers and social media influencers like to be doomers because they want to get a lot more views, get more subscribers, and earn more advertising revenues. I call them doomer influencers or doomer YouTubers. They like to create a lot of fear, uncertainty, and doubt or FUD so they can get a lot more subscribers and views. They like to create a lot of fear. For example, they like to tell you that the market is going to crash, sell this now or get out of the market now before it's too late. Here's the deal: if you're a long-term investor and if you want to grow your portfolios exponentially over time, I think it's very important not to follow all these fear, uncertainty, and doubt videos. These FUD videos do not benefit you in the long run. They are only for entertainment purposes. So how do you grow your stock portfolio exponentially over time? And what is my growth investing strategy? Let me explain here. First of all, I believe anyone can become a multi-millionaire through long-term investing. In fact, it's much easier for you to become a millionaire now compared to before. For example, if you have a portfolio that's around $50,000, and if you keep saving at least 10% of your gross income every month, or at least $2,000 every month, and if you keep investing in a low-cost S&P 500 ETF, you will have a $1 million portfolio after 15 years. Historically, the S&P 500's annualized average return was about 10.26% each year from 1957 to 2023. I'm using a 10% compounded annual return here. Of course, if your current portfolio is much bigger, let's say $100,000, or if you can save more money every month, or if your portfolio's average return is much higher than 10% each year, your portfolio will grow much faster. In this case, you will have a $1 million portfolio in about 11 years. This is why I believe anyone can become a millionaire or even a multi-millionaire through long-term investing. It's not hard at all, but it requires a lot of discipline. You will need to have the right investment plan and the right investing strategy. So what is my growth investing strategy going forward? As you may already know, the current market's return is largely driven by only a handful of mega cap tech stocks. This group of mega cap tech stocks often contributes the most returns in the S&P 500. For example, at the time of making this video, the S&P 500 is up about 12% this year. According to this Bloomberg article here, the 5 biggest stocks, Microsoft, Apple, NVDA, Google, and Amazon, have been responsible for more than half of the market's total gain this year, thanks to the current AI boom that's benefiting these mega cap tech stocks the most. This means without these 5 mega cap stocks returns, the S&P 500's total return would be much lower this year. Here's another stat. According to Statista, NVIDIA stock returned about 121% in the first 5 months of 2024, while the S&P 500 returned about 11% during the same period. The S&P 500 is market cap weighted. This means the largest tech stocks such as NVIDIA, Microsoft, Apple, Amazon, and Meta will always have the largest weight in the S&P 500 each year. Again, without NVIDIA and other mega cap stocks returns this year, the S&P 500's total return will be much lower. Now, you understand that the market is heavily concentrated on mega cap tech stocks. These mega cap tech stocks control the most returns in the S&P 500. If you don't have any of these mega cap tech stocks, you will likely underperform the S&P 500. Here's the important part you should know. These mega cap tech stocks such as Microsoft, NVDA, Google, Amazon, TSMC, and Broadcom are benefiting the most from the current AI boom. They are the market leaders in their sectors. Most of them are near monopolies. It's extremely hard to compete with them. They earn the most revenues and profits. They earn much higher profits compared to the rest S&P 500 companies. So naturally, they should be the best performers in the S&P 500 in most years. This is my growth investing strategy this year. My plan is to keep investing in the best tech companies that will benefit the most from the current AI boom going forward. For example, I will continue investing in more NVIDIA, TSMC, ASML, Microsoft, Google, Amazon, and Synopsys whenever they become undervalued. They will continue to benefit the most from the current AI boom. I'll give you more personal examples here to explain my growth investing strategy going forward. This is from my stock portfolios. It is separated into 3 different accounts. This is the first account. This portfolio is performing very well because I have invested in the best companies such as MasterCard, Microsoft, Visa, Amazon, TSMC, Google, ASML, Meta, and American Express. They are the best companies in their industries. I bought them when they were much more undervalued before. Right now, I want to have a more concentrated portfolio and have more AI and semiconductor stocks going forward. So I will likely consider selling my American Express shares and reinvesting the proceeds in more NVIDIA, TSMC, ASML, or Synopsys going forward. This is the second account. I rebalanced this account to be more concentrated recently. This account is also doing very well. In fact, it has several multi-bagger stocks. Similar to the first account, I may consider selling my American Express shares and use the proceeds to invest in more NVIDIA, TSMC, ASML, Google, Microsoft, and Amazon. They will continue to benefit the most from the current AI boom. This is the third account. This is a newer account compared to the other 2 accounts, so it will take a while for these companies to become multi-bagger stocks. But I expect this account will also perform very well over the long term and have many multi-bagger stocks because I have invested in the best companies such as Microsoft, NVIDIA, American Express, TSMC, MasterCard, Google, Amazon, Synopsys, Visa, Meta, MSCI Inc., Adobe, Salesforce, and Tesla. They are the market leaders in their sectors. I said this in my previous videos. I'm in the process of rebalancing this account to make it more concentrated similar to the other 2 accounts. Once MSCI Inc., Adobe, Salesforce, and Tesla recover a lot, I will likely sell them and use the proceeds to invest in my top holdings such as Microsoft, Google, NVIDIA, Apple, and Amazon going forward. In summary, I believe the market, the S&P 500 and the Nasdaq 100 will rally even more this year because of the reasons I explained in this video. I believe it's very important not to follow very negative people, the doomer YouTubers and social media influencers who always crave fear, uncertainty, and doubt. They always tell you that the market will crash and sell now before it's too late. You cannot grow wealthy over time by listening to these doomers. I believe it's much better and more sensible if you follow the long-term investors who have done very well over time. Also, I think it's very important not to speculate on meme stocks or other very speculative assets. This is my investment strategy. It has worked very well for me over the years. If you want to grow your stock portfolio exponentially over time, you just need to keep investing in what you know the most. Invest in the best businesses that are the best in their industries. Buy them when they're undervalued. Add more money to your portfolio every month and invest for the long term so you will eventually have many multi-bagger stocks. Also, you can sell some shares if they become exceedingly overvalued. Alternatively, if you don't want to pick your own stocks, you can just keep buying the S&P 500 every month. Use dollar cost averaging. Add more money to your portfolio every month and invest for the long term so your portfolio will grow much more over time. Now, all these are only my opinions and my analysis based on my research. They are not financial advice. There are always risks associated with investing. It's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.